Hi, Santa Barbara and Montecito. My name is Daniel Zia. I'm the founder and CEO and lead broker associate for Zia Group with eXp Realty, and I'm here to deliver on our promise to be your real estate economist of choice here in the local market. And I want to deliver our August real estate market update, which goes over all of our statistics in South Santa Barbara County for the month through the end of the month of July in 2023. So one of the sustained elements that we have right now is we have sustained higher interest rates. That's bad news for our real estate market, and that's tempered activity a little bit. But one of the unique factors of our Santa Barbara and Montecito real estate market is the sheer amount of cash that is in our local economy and that out-of-town buyers bring to the table. That's represented in the month of July, where literally nearly one of every two transactions, nearly one half of all transactions were actually cash purchases in July. That is actually the highest statistic I've seen in any month in the recent market in the last few years. Normally that hovers around high 30s to low 40%. So to have 49% of those transactions actually close cash is actually really unique, and it's a sign that buyers are not deterred by the high interest rates. They're still going to find a way to be able to buy that property. As far as what the market feels like, it feels very comparable, frankly, to this time last year in 2022. The market overall has been very flat. Similar sales activity numbers, similar speed of the market, and in some ways, similar kind of discount that we are seeing off of the asking price compared to about this time last year. On average, properties in the market as a whole are selling for about 2% below their asking price, and on average, it's taking about 3 weeks on the market to be able to sell. Now, I'll go into some of the different micro kind of niches in our market, and the different segments of the market are seeing different sales activity and seeing different discounts. But as a market as a whole, we're actually seeing a pretty stable, active market, and it still continues to be predominantly a slightly seller's market versus a buyer's market, even with some of those limiting factors like with the interest rates and the buyer demand being a little bit more tempered as a result of that. And part of that, or I'd say the primary reason for that, is simply a lack of supply. We essentially have the lowest number of homes available than we've seen in years and years and years. To put that into context, is we have about half as many homes available for sale now as in 2019. Only about half as much inventory. So that's a big difference in this market right now, and that's the primary driver or result of the lower number of sales there. So as far as prices, this is kind of interesting when you look at like month over month stats. Like if you look at July 2023 over July 2022, the median sales price was actually up 12%. That can be deceiving. So if you're just looking at like the title records and like the tax data, it can be deceiving because you think, wow, prices are up 12%. I don't think that that's true. I think that is a smaller sample size in a monthly data point over a different smaller sampling size in a monthly data. So we dramatically prefer to use year to date over year to date. So that's January through the end of July in 2023 to January over the end of July for 2022. That tends to be far more accurate with actually or as a representative of what the market actually feels like when you look at individual properties. Are they selling for more or less? The reality is that home prices today are selling in general a little less than they were last year at this time. Depending on the statistics that you use year to date over year to date, that's anywhere between a kind of a 5 to 6% decrease in sales price, whether you're looking at the median sales price or the average sales price, whether you're taking out the luxury areas of Montecito and Hope Ranch or you're including them, it's about kind of a 5 to 6% decrease there. Now, if you're looking at the sales price, we are still we are almost at a near historic high. We're just below 2022 levels. But to put that into context, when you look at the kind of the end of 2011, beginning of 2012, last trough of our market or bottom of our market, sales prices are still up over 2.5 times compared to what they were there. So that's kind of where we are on prices. As far as inventory or absorption rate, how many months of inventory there are for the market as a whole, we're about 2 months of inventory. That's one of the big determining determining factors when we're trying to predict if prices are going to go up or down. That's still very, very low. Historically, we haven't seen a significant and sustained drop in real estate prices unless if you're at least at 6 months of inventory or more in the affordable market, and higher than that generally in the luxury market. Now, the luxury market is seeing a higher absorption rate. That's pretty standard, and we're seeing about a 5-month absorption rate or 5 months of inventory in the luxury market, but that's actually down compared to the month before. So that's even been tightening up, and just anecdotally, we've seen a lot more kind of luxury sales activity and even some renewed optimism in the market, even just in the last kind of few weeks. When we look at just kind of the selection of homes that buyers have today, we're about 20% fewer homes for sale today compared to last year. So even the market feels the same. In some of the other dynamics, we do have less inventory. So I'm actually impressed that we haven't seen a lower number of sales when you factor in just that lower constrained inventory. Now, when we do look at the number of sales, we look at 2021 as one of the record-breaking years in the last few decades as far as the number of sales. And sales year to date is about half what it was in 2021. So what's interesting is we've actually just reached the 2023 has kind of reached the infamous statistic point of it's actually the lowest number of yearly sales year to date of any year since we started tracking that like 20 years ago. And so that's not a good thing. That's just showing that the market is constrained. Prices aren't falling. The sky isn't falling. It's just, hey, it's a tight, constrained market. And that's predominantly, we don't have enough home sellers choosing to sell their home. So even though we have active and willing buyers, we don't have the inventory to sell them, which is making a constrained sales environment, which coincidentally or kind of correspondingly is creating sales prices maintaining that kind of more of a tighter environment without a kind of a falling home price like we saw in 2008, 2009 when we had this kind of low number of sales. Different market, different economics, and so in a lot of ways I think we'll probably see a different recovery. Now, as far as interest rates go, best predictions from the lenders that we know and trust are thinking, hey, interest rates probably aren't going to go down until sometime next year, and we're probably going to see them drop, I don't know, maybe by a percentage point or something sometime next year, and then end of 2025, maybe they're in the low to mid fives by the end of 2025. So we are just kind of gearing up to, hey, this is more of a sustained market. We're not expecting interest rates to drop as rapidly as they went up a year and a half ago. As far as the luxury market as a whole, we are seeing, which is pretty standard. Actually, we're seeing something kind of unique that's not standard. We're actually seeing that recent activity, luxury homes have sold more quickly, which usually means they're selling closer to the asking price compared to previous years. But while homes are taking less time to sell in the luxury market, they're selling a little bit below the asking price. So it just means that my interpretation of that would be that sellers are a little bit more open to negotiation of their homes, and they're making those decisions and offering that discount sooner, so the properties are selling sooner rather than being on the market 3, 4, 5, 6 months and then making those concessions even 3, 4, 5, 6 weeks on the market. They're making those concessions earlier. Buyers are excited about those discounts. Buyers are ready to move. They're moving forward, and oftentimes cash, like we talked about. So the average luxury property is taking just about 40 days to sell and selling at about a 7% discount from the last asking price. That's what's seen in that last kind of negotiation, plus any negotiation or renegotiation when it comes to requests for repairs or credits. As when you look at the inventory of the luxury market, you've got about 64 luxury homes and condos available. And when those active inventory, that active inventory has been on the market for about 3 months. So again, the well-priced and exciting listings are selling very quickly, oftentimes still in 1, 2, 3 weeks. Some properties are taking more like 3, 4, 5 months to sell, and that's averaging out in that kind of 40-day range. You still got good luxury activity. The highest luxury sale this last month was 808 San Ysidro Lane. That sold for $14 million, a beautiful estate in Montecito. And the most expensive oceanfront condo in Montecito closed on Plaza Pacifica for $6.2 million. Oceanfront condo, absolutely beautiful. When you're talking about condos, when you just look at the condo market as a whole, including the more affordable market, that market's actually doing really well. On average, the condos are selling for just a hair above their asking price, a little bit above 100%. And they're selling very quickly. On average, they're selling about a week week quicker than their single family home counterparts. But interesting enough, in July, I think it was just there weren't enough homes to sell them. We did see the number of condos that went into escrow decrease. So I would expect that to see that in the August statistics, that we actually saw a lower number of sales compared to last year. New inventory for condos is down about 30% year over year, and that's driving a lower sales activity as far as the number of sales, down by about 30%. So again, the condos that are coming on the market are selling quickly and for great prices. The challenge, though, is there are less of them that are coming on the market, so there's less sales activity, and so it's just, again, a more constrained market. When you look at like what are prices doing for condos, it's interesting. It depends on which statistic that you look at, and again, whether or not you're adding in the luxury market of Hope Ranch and Montecito. Some stats say that the condo prices have sales prices have gone up by 1%. Other statistics say they've gone down by about 2 to 4%. All in all, frankly, it feels pretty steady and average. So I don't think sales prices have gone up dramatically or dropped dramatically from the condo market. So there you have it. Looking forward, we're going to be exiting our summer market here in the next 30 days and entering in kind of that early kind of fall market. We would expect to see just a tighter market with lower inventory, some good negotiation leverage with buyers to sellers, but still a slightly seller's market. So just kind of stable and steady for the next number of months would be our prediction. Until next month, have a great rest of your August and a great finish of your summer. And for those of you the kids, hope the beginning of the school year goes well. I know that's a transition for a lot of us. Take care.